Good morning, everybody. Welcome to today's 1Mby1M Strategy Roundtable for Entrepreneurs. 1Mby1M, as you know, is the first and only global virtual accelerator in the world. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue, build $1 trillion in global GDP, and 10 million jobs. And in search of that mission, or in pursuit of that mission, we do these free mentoring roundtables week after week after week. This is the 464th session. And it started back in 2008 that we started doing this. The event is being recorded. Every single recording of prior sessions are available on our YouTube channel, 1M1M Roundtable. Our Twitter handle is, we have two Twitter handles. One is the 1M1M handle, and the other is Romana, my handle. Either one you can follow, and we publish a lot of interesting content. Hashtag 1M1M is the hashtag for today's live streaming session. These are the call-in instructions. We're not quite ready for you to call in, but we will be. This is a roundtable. We want to hear from you. By all means, call in. I will put the slide back up when we are ready for you to call in. Before we start our scheduled programming today, I want to remind you that the Blackboard 1M1M Social Goods Startup Challenge is on. Maureen, you can share the link in the public chat. If you're working on a product that caters to one of the verticals that Blackboard is interested in, whether it's arts and cultural organizations, nonprofits, foundations, CSR organizations, healthcare, IT, AgTech, any of those are within the social good broad umbrella. And if you are in a position to integrate with Blackboard's platform, they would be very interested in you. And so that's basically the challenge. Blackboard has 45,000 customers, and they're giving access to customers depending on what vertical within their customer base you're working on. And they're also offering scholarships to the 1Mby1M program through this partnership, the premium program, and there is also a 5 to 25K non-dilutive grant that you may be considered for from Blackboard Ventures. So it's a very substantial set of rewards, and I would strongly encourage you to apply. We are going to start today's session with a conversation with Francisco Jardim, founding partner at SP Ventures. Francisco, welcome to the show.
Hello, Saurabh. It's an honor to be here. Thank you very much for the invitation, and I'm glad to say that our firm's vintage is very quite similar to yours. We founded the company back in 2007, so almost when you were getting started over here.
Right, fantastic. So tell us a bit about SP Ventures, and let's get our audience introduced to you.
Great. So, first, the SP comes from São Paulo, the financial services, industrial, and technology capital of Latin America. We founded a company here originally with a intent of building out the venture capital industry and replicating the Silicon Valley venture capital playbook. So we were agnostic, early stage focused, and very focused on working the ecosystem. Now, we raised approximately a $10 million fund back in 2007, which we deployed in 8 companies. And much to our surprise, of these 8 companies, 4 were in the agricultural sector, the AgTech. And none of us expected that. Okay, we expected to have a very Silicon Valley oriented portfolio in software, e-commerce, IT, AI, etc. And much to our surprise, ag just stood out, following best entrepreneurs, biggest market opportunities, and we really started to do a lot of soul searching during those years to try to understand why, we were having so much deal flow and so much investment track record in ag back in the early days. And a few things that have become quite mainstream in the global VC and specifically in the global ag tech investing scenario over the past 3 or 4 years leapt out in us, and perhaps doing a parallel with what Peter Thiel in his book 0 to 1 describes as your contrarian truth. We kept seeing these fundamentals in AgTech investing back then, and the rest of the venture ecosystem pretty much shying away and not really believing in the AgTech opportunity. So, I mean, what were these fundamental things that really showed us that AgTech investing was the greatest or one of the greatest investment opportunities in our generation, and that, you know, led the firm to, in our next fund, become an AgTech exclusive fund, right, or firm. First of all, I mean, whether you're reading in a research report from McKinsey or from the Food and Agriculture Organization in the UN, the FAO, the numbers were pretty much uniform. Until 2050, in the coming decades, driven by global population increase and changing demographics and enriching emerging markets demanding more animal protein, there was going to be a demand in 60 to 80% additional demand in food, right? So the planet was going to have to produce 60 to 80% more food in order to feed this driven demand. Second, if you looked at the 5 or 6 regions in the world that could feed this growing population, you know, Europe, Canada, US, Argentina, Brazil, Australia, Brazil and the greater tropical ecosystem of Brazil, which includes Bolivia, Paraguay, and Colombia, was by far the best positioned location to increase production. Now, when I mean increased production, I mean in new farmland and also in increased productivity in existing farmland. And both of these factors meant that there was going to have a radical new adoption or increase in adoption of technology, right? The third thing that stood out to us is that when you compare our region, the Latin American agricultural landscape, to the rest, we are the only tropical agriculture. What does this mean? We have 2 to 3 harvests a year, contrary to temperate agriculture where you have 1, 1.5. We don't have biological activity being frozen over during winter, so we can produce all year long, but at the same time, pests, diseases, soil changes occur all year long. So it's a very different type of agriculture. We have soil variabilities, we have microclimate variabilities, the size of farmers is different, the human capital to work the farm is very different, the infrastructure in farmland is very different. So what does this translate in terms of tech investing? It means that we demand native solutions. What is being developed in Tel Aviv, in Haifa, in Silicon Valley, does not work over here. It has to be redeveloped, recalibrated. And we always believe that local entrepreneurs tackling local native problems were going to have a big competitive edge. So, I mean, Brazil was already the second biggest food producer in the world. Great growth opportunity. We had a barrier to entry because of our tropical characteristic and nature. So all these factors just, you know, screened out and said, well, let's build out some big local tech companies that are solving these big bottlenecks to be able to guarantee global food safety in a sustainable fashion.
Can you talk about what those bottlenecks are that can be tackled with IT? When you say AgTech, I take it that you are talking about information technology as it applies to agriculture?
Of course. So, first of all, when we describe AgTech, we mean, and what we see as the end consumer market, we mean the entire agribusiness value chain, which represents in Brazil approximately 22 to 24% of our GDP. So it's very relevant. And this includes all technologies or all improved methodologies to increase yields from planting and soil fertility, all the way to how we deliver food products to end consumers. So, I mean, it's really what has become pretty well known in the industry as farm to fork, right? It's the entire value chain. So I'll give you 2 very hot subsectors that we're looking at right now. First of all, distribution of ag products. By ag products, I mean seeds, fertilizers, chemicals, biologicals, machines, machine parts, is around the $30 to $35 billion market. And distribution has always been offline, with offline retailers, offline distributors. And this is quickly going online. I'll give an example. We invested in a company based out of Rosario in Argentina called AgroFi, which is quickly becoming the Mercado Libre, the eBay, let's say, of ag here in Latin America, early winner of the game, has been gaining a lot of traction. So that's an example of e-commerce and of online distribution. Another subsector that has become very hot is that agribusiness in Latin America traditionally has not had a financial services industry. And we've not had a financial services industry for a wide range. First of all, there was subsidized government funding that distorted and crowded private markets, private credit and private insurances out. Second, the traditional financial services industry was never capable or comfortable pricing and understanding the uncertainties relating to ag. And just remembering, agriculture is a manufacturing operation with a 9 to 12 month working capital necessity and involving biological activities completely exposed to climate. So it's a very risky, difficult to understand and difficult to finance and manage risk. So I think these are two reasons that it didn't take long to develop. And now what we have is the public financiers, the public sector leaving the subsidized market simply because governments have gone exhausted from a fiscal perspective, so they're going pretty much bankrupt. Second, tech-enabled and digital transformation of agriculture has started to bring a lot of transparency to the sector, and the financial services industry starts to see opportunities to price and distribute financial services product. So what we see is tech-enabled insurance tech, credit tech, and payment platforms that are surging to be able to bring productivity to ag. Yeah, I gave you just two examples, but we're looking at things in smart irrigation. We're looking at things at smart application of herbicides, insecticides, and fungicides. We're looking at smart planting and seedling and harvesters. We're looking at satellite technologies. We're looking at drone technologies. We've invested across the board in most of these sectors that I told you, and there's still so much to come. Blockchain is just getting started in the region as a way to guarantee food traceability and securitization of agricultural debt. I mean, there's a lot of stuff going on.
Very cool. So how big, you said the first fund in 2007 was $10 million. What fund are you on, and how has the fund size progressed?
Yeah, I'll give you the dollar. Most our funds until the current one that we're closing right now have always been in local denominated currency. So I'll give you what they represented in dollars at the time of the closing, just so that the audience can relate a little bit better. The first fund was approximately $10 million US. The second fund that we closed in 2014 was approximately $40 million US, and the one we're closing hopefully by the end of December next month will be hard capped at $75 million US, right? So we've been increasing. We're not going to those $1 billion large funds. We feel that venture capital is a very boutique financial intermediation. We get very involved in deal flow sourcing and especially in adding value to entrepreneurs. So we don't want to have $500 million under management. We really want to be able to have 4 to 5 deals max per partner at the company. But that's a range, okay? So we've gone from 10 to 40 and now $75 million funds.
How many partners in the fund?
4 partners at the fund.
4. Okay.
Yes.
And
this is in the. I'm sorry.
Sorry. Please go ahead. Finish what you were saying.
No. Just we have another business that we started this year as well. We launched the first venture debt fund in Latin America. This is a business that is within the GP, but my partner Gabriela runs this practice, and it's starting to replicate the Silicon Valley Bank original business model here in the region and offer a non-dilutive long-term financing to entrepreneurs, because we had seen in our portfolios in previous funds that the best companies in our portfolio that were growing 3 digits a year, had great management, great unit economics. They could never raise any kind of leverage, and equity financing was the only type of financing they could do. And entrepreneurs were, to be 100% sincere, were just getting too diluted and giving up too much equity by the time they made their liquidity status. So we also launched the first venture debt fund. This is a $40 million fund.
And talk to me about stage. You said you started off by saying that you like early stage. So define early stage for me. Are we talking seeds? Are we talking pre-seed, concept stage? What's comfortable for your fund?
Yeah, so the current fund, now that the AgTech ecosystem in the region is already on its way to maturity, we are giving ourselves the luxury of becoming much more stage specific. So we do late seed and Series A as the sweet spot that we invest. So to give you an example on the $75 million fund, how the allocation will be deployed, we will be investing in 20 to 25 companies throughout Latin America in the ag food tech space, writing checks of $750,000 US to $1.5 million to get the party started, and we reserve up to $2 per investment to defend our positions and follow-ons, right? So that's a little bit what we do. In the past, when we were the first guys to get to the AgTech venture game in Latin America, we did a lot of very early bets. So we got a lot of companies that were just starting to sell their products and some even pre-operational, and we did probably very pre-seed and early seed transactions. But this was out of necessity because we had to build the ecosystem, build the platform. One more thing that we did as well in the beginning to get the ecosystem up and running, we co-founded with the largest sugarcane and ethanol operation in the world, a group called Raízen, which is a joint venture with Cosan and Shell Corporation. We co-founded an AgTech accelerator, which at the time was the first AgTech accelerator in Latin America, in which has become a very well-known place. If you want to develop and launch a technology for sugarcane anywhere in the world, this accelerator called Pulse Hub has become definitely the go-to place. It's where you can really get the 1 million or so hectares that Raízen operates, and all their sugar mills and all their fermentators to ethanol and downstream operations with trading and gas stations. We really get entrepreneurs by hand, and we co-develop technologies and we help them roll out. So we've done a lot of things in the past to get the ecosystem up and running, but now as a VC, we really want to stick to late seed and Series A and then defend our positions throughout the rest of the stage financing.
So you put in about $3 million per company in about 20-25 companies roughly in late seed Series A. You have this accelerator to get things off the ground. What about in between the accelerator and the late seed Series A? Are there funds that have come up who are able to fill that gap?
Yeah, so, I mean, Latin America right now is in a very exciting moment. I mean, if you guys have been reading TechCrunch and seeing a lot of the things, you've been seeing, a lot of the hype, a lot of people saying Latin America is the new China. SoftBank has been doing a lot of business in the region over the past, 12 to 18 months. Latin America had never had a unicorn until late 2017. I'm sorry, not Latin America. Brazil had never had a unicorn until late 2017. And we had only had, as a region, Latin America, only 3 unicorns until 2017. And then from late 2017 till last week, we've had approximately 10 unicorns just in Brazil. So the ecosystem has come of age. And this has meant that all the stage financing locations have started to grow. There's a lot of angel investors. There's a lot of accelerators that do earlier investment. And there's a lot of seed and pre-seed funds coming up. So I won't say that it's an extraordinarily liquid ecosystem, especially if you compare it to Silicon Valley or Israel, but it's definitely much less difficult to raise capital. Yeah, it's much less difficult to raise capital here today than it was 2 years ago. I mean, it's the dynamics are great.
And what is the limited partner scenario for AgTech? So this $75 million fund, or the $40 million before and the $10 million before, well, the $10 million was not AgTech specifically, it accidentally became AgTech, but the $40 million was AgTech, the $75 million is AgTech. So is there a set of limited partners that are particularly interested in AgTech VC funds?
Yeah. So I can't disclose the names, but I can give you the profiles. We have 2 anchors that are very large ag multinationals, some of the largest companies in the world in the ag space, who have been active in the corporate ventures sectors, and these 2 guys are LPs. We have a large DFI, a development finance institution, who is also a third anchor. We have fund of funds who have been deploying capital and diversifying their LP base across several different venture ecosystems, and they see ag as a very promising investment landscape. Our new fund is ESG compliant. I mean, whenever you invest in ag tech, what we notice from the beginning is that there's something that you're doing no matter what. You're increasing global food security while optimizing the way you produce it. So you're producing that food of probably less water resources, less chemical fertilizers, less land. When you produce more of less land, you put less pressure on deforestation. So AgTech tends to be a environmental friendly investing space. So we started to have a lot of impact investors, LPs, or LPs that are concerned with the rate of CO2 emissions and deforestations. And I don't know if you know, but 70% of global freshwater application is agriculture. So it's very difficult for you to have a sustainable policy involving freshwater in the planet's use if you don't tackle it through agriculture. So, I mean, I think that's DFIs, corporates, impact investors, and more family offices, high net worths that have exposure to ag or see ag as not only a transformational sector from a technology perspective, but also as a very defensive sector, because demand for food is always going to be very inelastic, and it's always hard currency denominated, right? I mean, the underlying assets in soybean and sugar and cotton, they are denominated in hard currencies and negotiated in global exchanges like Chicago. So those are the general piece that we've been attracting for our funds.
Very good. Let's talk about a few of your companies, and you can pick which case studies you want to discuss in a bit more depth. So take maybe 1, 2, or 3 companies that you've invested in that are moving well and so forth, and talk about what kinds of problems they're solving.
Sure. So I'll start out with...
1 second. Before you go, what kind of problems they're solving? What states did they come to you? How did you find them, or they find you? And what is it about them that caught your attention enough to want to invest in them?
Gotcha. So let me start off with a company called AEGRO, AEGRO, AEGRO. It's the leading FMS, farm management system. So it sells enterprise software for small and medium farmers. We got this company at a very early stage. It was founded by 4 brilliant computer science majors from a university in the south of Brazil. And I think that we saw the FMS-based platform as one of the spearheads of the digital transformation of farmers, right? So farmers, I'll speak for Latin America, they still manage their farms. I mean, and this is changing rapidly right now. But guys that have 200 hectares, 400 hectares, I mean, relevant farms, they still managed it either with a notebook or with an Excel spreadsheet. I mean, and again, a very complex operation where you're using seeds, chemicals, you're fighting biological warfare, you're exposed to climatic adversities, you have volatility in prices from your inputs all the way to your end products. I mean, a very complex operation of machinery, and these guys are managing it in a very simple fashion. And if you look at farmers, and I've heard that this is the same if you're talking about Illinois or Ohio, you have farmers that are having very high productivity, producing 80 bags of soybean per hectare in one side of the street, and his neighbor is doing 20, 30 soybean. And that's the difference between a guy who's making money and a guy who's going out of business. And what's the major difference? It's management. And the best way for you to spearhead management is through information technology. So we saw these guys, they were very focused on building a fantastic product. That was their number 0, 1, 2, 3 priority. I think this is what sparked their eyes. And we decided to choose these guys as our horse, our bet, to be able to lead a very important part of the digital transformation of ag.
This brings a question to my mind. You said these are 3 brilliant computer scientists who founded this company. Where did the domain knowledge about farms come from?
Yeah, so
why did they choose to work on that problem?
Yeah, so that's an interesting point. They had attracted a very senior, older agronomist who was a consultant to the rice industries in the south of Brazil, and a very well-known guy. And they had attracted him to the business. That he became their godfather, let's say, a mentor from a very early stage. He had gotten a little bit of equity in the company, so he was, very aligned from an economic perspective. And he was helping the boys exactly with what you said, to make the leap from computer science to understanding the pain points and the agronomy challenges of the farmer. Now, that said,
and why did they choose to go in that direction? What was the draw for them in farms?
I believe it's the same thing that drew us. I mean, first of all, it's a major purpose driven. We see that it's such a representative part of our economy, and at the same time, it's a sector that is so exposed and volatile to all these external issues.
There was nothing like these, the computer science students came from farming families or anything, so they didn't really have any roots at all in farming. They just randomly picked up farming as a domain that they want to work on and apply their computer science knowledge to it. Interesting.
Exactly. I mean, they saw that it was one of the big challenges of mankind. I mean, it's a Malthusian dilemma.
Sure.
The current agricultural system, it's broken. I mean, the way it is, it's unsustainable in terms of fertilizer application, in terms of insecticide application, in terms of CO2 emissions. The way it's done today, it doesn't work. And to think that we're going to have to increase it by 60 to 80%, I mean, it's just digging deeper. So I think the one thing about that. Yeah, we were the first investors in the company. We wrote a seed check. The company grew significantly, and then we wrote a late seeds check again. So we did 2 rounds in the company. And besides building a great company, what these boys were able to do that we haven't seen anybody in AgTech globally do as well is that there was a big concern, or there was a big paradox that if you spoke to anybody traditional from ag, and this included, Monsanto executives, farmers, all these guys, they would always tell you, you're never going to sell technology to farmers if you don't go to the farm, get your boots dirty, have coffee with the farmers, and spend hours and hours and hours chatting with them. And what these boys said is, no, we don't believe this. We think that farmers are just like regular people. They are going through a information overload. They're being digitally transformed and impacted. And inside sales and inbound marketing is going to work. And the revolution that happened in other sectors of sales, where you produce content, you attract users, you feed these users with content, you make a call, and you close a sale with a demo, is going to work in farming. And these boys did this, and it's worked. I mean, the company is growing 13% a month without having one field sale, guys, all inside sales and inbound marketing.
Excellent. And how far along are they? What kind of revenue levels are they at?
So they're not disclosing revenue levels, but I can tell you the hectares they're doing. These guys are already doing 6,000 farms, okay? That's over 1,000 paying customers, okay? And growing by 13%, so they're growing by over 700 new farms per day, per month, over 120, 130 new clients per month, so significant. And they're already doing over 4 million hectares. Now, let me just give you a comparison. There was a company, a parallel company, called Granular that did something very similar to them in the U.S. Granular, when they had around 3 million hectares, I believe, was acquired by Corteva for $300 million. This was an Andreessen Horowitz-backed company. The boys here are already 30% bigger than Granular was when they were acquired, just to give you a parallel, okay? And what we see so interesting about this vein is that once you have farmers with their FMS and you're managing the entire operation, you're seeing what they're buying, you're seeing to who they're selling, you're issuing their invoices through the system, you're collecting data, you're engaging, you are in a very competitive position to do much more efficiently what the banks try to do, which is provide capital, identify if they're good farmers or not, send people to the field to visit, to see what these guys do, how they're doing it. We have this information already uploaded. So we are in a very comfortable position to be able to price and distribute financial instruments through this FMS. And we think that this company can become, in the coming years, a digital bank for farmers, a leading provider of credit and insurance for farmers.
Very cool. So I don't know if you've been reading our Entrepreneur Journeys series on the blog. We profile entrepreneurs and their journeys, how they've built companies. So if this company has crossed 5 million in revenue, which I'm assessing it has, please ask them to get in touch with us, and we'll be delighted to do their story.
Deal. I'll definitely ask them to. Yeah, I'll have the founder CEO Pedro Dusso, a very inspiring figure, get in contact. It's 5 million annual revenues, right?
Yes.
Okay, yeah.
That's right. Okay. Very cool. Is there any other company that you want to discuss before we wrap up this segment of the meeting today?
Yeah, perhaps a company that we co-invested with Syngenta Ventures and Bunge Ventures in Argentina. Now, this is interesting because Argentina has been making the headlines and getting a pretty bad rap for political turmoil and all these things. But I mean, coming from Brazil, I can say this with no prejudice. Argentines have always been fantastic entrepreneurs, and they have a dilemma that is very similar to what we see in Israel. Since they have a very small consumer market, Argentine entrepreneurs usually start their businesses already looking globally, especially looking into Brazil and other expansion markets. And we have an investment there in Rosario in a company called AgroFi, which, as I mentioned before, is the eBay or the Amazon of ag. And this is a company that in a little bit over 2.5 years has already become the early winner in the game in Argentina, already has over 40% of its revenues in Brazil, and has already launched Bolivia, Paraguay, and Uruguay. So it's a company that is dominating the e-commerce space for ag products in Latin America at a.
Excellent. It sounds fabulous. We would love to do that story as well if the numbers are already there. It sounds like they are. Terrific.
For sure.
You gave us a wonderful insight into the AgTech space and especially in the context of Latin America. So it was a fascinating discussion. Francisco, we are running out of time for your segment, but thank you for being here and wish you all the best. We'll keep in touch.
It was an honor. Thank you so much for having me, and let me know what we can do together.
Absolutely. Absolutely. Take care.
Bye-bye.
Bye-bye. Folks, we are going to switch to the entrepreneur pitch session. Remember, this is a safe working session. You can discuss whatever it is that you're struggling with, and I'll be happy to, brainstorm with you on what is it that you are facing roadblocks on. We are on your side. There's no other agenda but to help you accelerate your situations. You may disagree with my feedback. If you do, that's fine. It's your venture. You're going to do what you want to do. My job is to give you candid feedback, and you can decide what you want to do with it. Remember one thing, though. Not all businesses can raise money. Not all businesses should raise money. Raising money doesn't guarantee success, and that's a fact of our industry. Saurabh Acharya, you are going first.
Fantastic. So what we are trying to do here, so I'll jump right in, I believe.
Yes, absolutely. Please.
Yes. So in India, there's a problem of sorts, which is e-mobility so far has been very inaccessible for the average middle class. So people who buy cheaper scooters, because there's a very different market here in India, have not had the ability to venture into accessing electric two-wheelers for their daily commute. And we are trying to solve that problem in a way. So do you want me to, so can we move on to the next slide? I think, so just to talk about myself, I was
Saurabh, you have dropped off. Folks, while we're waiting for Saurabh to get back on the call, you can ask questions in the public chat, and I will take questions from the public chat. There's one question I see from Rajesh Dambigam. Hi, will they only invest in Latin America or globally? Are they open like India, etc.? No, this is Francisco's fund, SP Ventures, is an only Latin America fund, and in fact, it is only Latin America and only AgTech at this point. So that's the answer to your question. Matthew Zinman, you are sending me a private message. Please don't send me private messages right now. Let's use the public chat, and I will pick up your comments and questions from public chat. Your comment, Matthew, is, hi, Shrumana, I seem to be an attendee, not a panelist, so hope you can see me. Also can't see how to get my webcam on and no slide deck, but mainly a quick pitch for you. Matthew, if you want to do a quick pitch to me, you're going to have to dial in to the line when I open up the line for call-ins. So you're going to have to wait. Let me finish these earlier pitches, and then we will get to open Q&A and open pitches. So you have to wait for a moment. If you don't book your slot in advance, then we cannot schedule you for a pitch. So Sayander Paul, I'm going to go to you next. While Saurabh's technical situation is getting sorted out. So you can go ahead and do your presentation, Sayander.
Yeah, sure. Cool. So the thing that we do is like, our company's name is AutomizeApps, and we have been there for like 1 year now. We are working mostly on automation of collect data. So I'll just go a bit more detail. So we help e-commerce businesses by providing consumer insights. So what we do is like we crawl the web for So our target customers are the smaller e-commerce businesses, so which don't have the technical infrastructure to handle thousands of consumer reviews, and we believe that the consumer reviews can give very valuable feedback for the businesses, and which they can use it for example, product development and like reducing the marketing costs, and also like ads restructuring. So what we do is we are a software as a service. So we create a dashboard for the businesses, and they can see where like for example, targeting and consumer reviews. I just followed the template. I didn't.
Sayander, do you have customers?
Sure. Come again?
Do you have customers?
Come again? I couldn't.
Are you not able
not
to
yet. We are still. Yeah, I can hear you. So what I was saying, like till now we don't have like we are in talks with some companies to get customers, to have customers them as our customers. So we are in the like more in the negotiation phase. We don't have any customers till now. Like we don't have.
How long have you been doing this?
It's been like it's been almost a year.
Okay. And so you didn't validate with customers before developing the software?
Not fully. Like we had like 60 interviews. Like that was a bit later. So we are actually. So this is the customer validation part. So we have like 3 use cases for which we are targeting. So like the companies which have lots of reviews, companies which have critical reviews, and the companies which are planning to bring new products as a market research. So these are the 3 use cases we are looking at. So we are also looking at verticals. Like for example, now we are focusing on electronic accessories, and getting in touch with them and finding out if that could be the best place, or if
and which of these use cases, the discussions you're having right now, in terms of companies that could become customers, paying customers, which of these use cases are you discussing with them?
So for us, it's like one. So the first use case, lots of reviews. So the electronic accessories fall into this category. Because so they have like most of the these companies have lots of user reviews, which we can analyze like 10,000 reviews and more. So and we create models that will say, okay, out of all these reviews, what are the major points to take away? That's where we are right now. So yeah. So what we do now, like
the question is about customer acquisition.
Yep.
So, you know, the thing that I'm trying to understand is, in an e-commerce company, looking at reviews is one of the most fundamental things for them to do. your assumption seems to be that they are not doing that and they're going to wait for you to come in and help them do that. And I'm not sure if that is a correct assumption. So your 60 interviews are with, what are they telling you? 60 interviews are telling you that they're not looking at their reviews, they don't have a way to analyze their reviews?
Yeah, so what they have is the Amazon Analytics, so which is the basic analytics. And what we do is something more. We say that, okay, out of the reviews of your products, for example, which features of your product are the best, which features are the consumers are saying are not that good, what are the issues with the consumer. So we go a lot deeper. So we have machine learning models which analyze the reviews and go a bit deeper and give them specific feedback. And on the basis of that, we also give them, on the basis of that, we also give them, like, for example, if, for example, a phone has like low battery, or we tell them for the next product, you can focus on like just the battery size, or if there's a packaging issue, so we tell them, okay, for the next product, just focus only on the packaging and not the taste, and this is for biscuit, for example. So,
are there competitors in the market that are doing the same thing?
Yeah, there are competitors, and there are 3 competitors that we found out, and so that's the thing. Like, if there are competitors, we are not really going, like, we are not going for the same companies which already have these stuff. So for many of the bigger companies.
The situation in the market is that there are e-commerce companies that are looking outside of their employees to bring in this expertise of analyzing reviews. There are a couple of other competitors who are catering to a portion of this market. So there are some companies that are already using these competitors' products or services to do this, and you're trying to find the gap of you're trying to be the third company in this space, catering to the unserved market. That's the situation.
Yep. Yeah,
and
like
do you have a? Go ahead.
Yeah, sure. Go for it. Yeah.
I was saying,
yes,
do you have a master list of all e-commerce companies that are in the target market, and a breakdown of who is with the competitors and which ones don't have any solution yet?
So we have an automatic lead generation. So we create the leads automatically. So that is there. Like, for example, if we say electronic accessories, we get all the companies with electronic accessories. But our like the lead generation is not that developed that we can see if they already have this thing. So that's not.
No, my point is, if I were to ask you, go find 100 companies, 100 e-commerce companies that are not already with a competitor but have this issue. They have a substantial amount of e-commerce business going on. There are lots of reviews out there, because you need companies that have some scale and they have reviews out there. Otherwise, your product is useless, right? So it's not, you can't work with the very small e-commerce companies. You have to work with companies that have some business going on. So if I were to ask you to go find 100 companies like this that fit that, those parameters, and they're not already working with another competitor, can you do that? Do you have that list?
As I said, like we just get I can't give the parameter that they are not with the competitors. So what I get is the complete list, but that parameter our like algorithm is not that advanced, so which can.
How many companies are on your target list that have substantial e-commerce business going on, but they're not so big that they have their own in-house products to do this kind of work? How big is that list?
So as I said, like we are focusing on accessories right now. So like right now it's just 100 for the next month. Like so we are trying to reach them out on LinkedIn and trying to get them on a call and thereafter discuss if that they are a good fit for us. So that's what.
And how many such conversations do you have going on right now?
Right now we have got like. So right now we have got like 4, so like which are like a bit progressing. So so that's how it is right now. I haven't called all 100 of them, so like we have called right now.
You're basically going to have to go through a brute force process. We have methodology. We have a methodology to do this. So you're going to need to learn that methodology and you're going to need to implement that methodology on how to do customer acquisition in a repeatable sales mode. So if you need to learn that methodology, you can learn it from 1 million by 1 million. But it is a, brute force, creating, touch points with the people, understanding what is their competitive situation, demoing what you can do, what you want to do, doing the pain extraction question in that conversation so that you understand that they do have real pain and they're willing to look for a solution and pay for a solution. So there is no silver bullet as such to do what you're trying to do here right now. So it sounds like you're, at least in the, at the basic level, you're doing the right thing and reaching out to people and trying to have conversations with them to find out which ones need this solution. That is we have methodology on how to do this. If you want to learn the methodology, we can teach you the methodology, but that you're going to have to implement that methodology of, selling basically.
So that's like so the thing is like so that's what we're working on, and like we're also thinking of if we could also automate like if we could sell parts of it also. Like we are focusing on like automating data like creation. For example, if we are also generating leads automatically, right? So we're also thinking if we could also sell, for example, leads. Like for example, if it's a company that sells buttons, like that. So for the buttons company, they need to sell it to a company that has shirts, for example. So you're also thinking that if we could use the data as a leverage also, like a part of it, So like that's also automated for us. So that's something we have like right there. We can also like while we are generating leads, we can also sell the data with the leads to someone who needs these leads, So like.
So all of these things that you're talking about are specific to specific client situations. So you're going to need to understand the problem the client has. What is it how does the client want to solve that problem? Do they want data? Do they want software? Whatever it is that they want, you're going to need to understand. But you won't understand any of this. This is why I asked you the question. How long have you been working on this? And you went and developed the solution without any customer validation. That is not the right way to develop products. In developing a product, you're going to have to get as many customers around you as possible so that you're developing products with customer input right from the beginning. So anyways, water under the bridge, a year has passed, you already have some code that you've written, you think you have a bit of a product. Now it's essential that you get like a large number of customers around you so that you can start going to the next stage with the clients and with a full understanding of what are they looking for, how do they want to buy your product, how do they want to pay for your product. So that's all I can say at the moment. Again, this is what we do. If you are unfamiliar with how to build a company, we can teach you how to build a company, and we're very happy to mentor you on an ongoing basis to do that. But you absolutely need to get customers close to you as soon as possible. Okay?
Yeah.
So hang on, I will talk about how to use 1 million by 1 million after we're done with Saurabh's presentation.
Yes, I am back, and I sincerely apologize for the problem last time.
Go ahead. Go on with your presentation.
Sure. So essentially, I earlier was working with early startups, small teams in marketing, and subsequently moved on to products. For exposure, I worked with a small corporate for a bit in strategy, and subsequently, I've been working on attempts to do things. So what we have done is we have created some products, e-cycles. We have stripped it down to the very basics so that we can maximize value for people to get onto EVs, but still they are fairly costly for people to afford. So what you see in the middle is actually a swappable battery. To your left, you see some freight moving e-bikes, and to the right are consumer bicycles, and in fact, we also want to foray into scooters. We are competitive enough with Chinese options by price, by design, and we are better designed for India. So we'll move next, please. So what we're trying to do is, so all our units have swappable batteries, and what we are looking at is to democratize the battery system altogether. So all of it is user swappable batteries. We are devising a smart battery inventory management system. We want subsequently to move this ecosystem into sharing with other players so that a lot of other people can leverage the same same swapping system. And we will look to hold a significant inventory so that we can make swapping. So why swapping comes into the picture is in India, the charging stations system, considering the real estate, cost of real estate, considering the awareness is very low. So I think swapping for Indian context, Indian cities is way to go. You're saying something?
No,
Okay.
just listen.
Okay. So we want to standardize it. We want to make it an ecosystem. We want to increase the adoption. We want to foray into B2B as well as B2C fleets so that the independent gig players, the independent gig participants, or the guys who deliver Uber Eats or Swiggy and so on and so forth, can actually leverage our fleets. We have products for them as well. And our battery management system and inventory management system is going to be.
What are you selling? What is the product? You started by showing all these electric bikes, right?
Yes.
Is that what you're selling?
So we want to start leasing out electric bikes to customers and businesses at a very low cost. These all e-bikes come with swappable batteries. We are also devising scooters on the same standard. So we think that we have to solve two things. One is the infrastructure to solve the range anxiety. I actually tried to adopt it to a small, short pitch version. So we want to solve, one, the range anxiety, the infrastructure problem, the fact that people don't want to own EVs because they are unsure what to expect with the ownership. So we want to come into a leasing model. And we want to create a battery swapping ecosystem so that it's taken care of in Indian context. So basically, considering there's no demand for swappable batteries currently, there is no swappable battery ecosystem for consumers. Nobody is being able to crack it. Moment we devise and give products or give these e-cycles to people at affordable prices, we believe a lot of people are going to come into swapping batteries as well. Also, it helps our B2B solution.
Whose bikes are you leasing? Are you accessing these bikes from a particular vendor, particular manufacturer?
So these, we have manufactured it ourselves. The products are ready for production. The bikes are ready for production. All the bikes that you see are produced in-house. And yes.
So that's a very capital-intensive game that you want to play.
Perhaps indeed. So, as per the previous slide, we were talking about range. We were talking about the fact that people do not see too much of value. What we intend to do is we intend to break even in a period of 1.5 to 2 on every unit, and subsequent to that, life of any vehicle that we have, considering those can be moved across, whether it's B2B and B2C, will have a considerable life cycle. So the range is taken care of. In fact, the capex is taken care of, and we want to move this into leverage, into loans, so that we are able to pay off the loans in a matter of a certain period, and then keep harvesting.
It's not the kind of business that we work on, so I don't really have much insight to offer you. We are a information technology accelerator. So this is not at all in our domain. The business that you're talking about is extremely capital intensive. You want to do manufacturing, then you want to do loans and so on and so forth. This is there's very little IT here. It's all hard goods. So that's not our domain at all.
All right. So you would want to close it, perhaps?
Sorry?
So you would want to close it? You would not want to spend time on this?
I don't mind. You can talk about it if you like, but I just don't think this is a fit for what we do. So I don't think you'll get much out of this conversation is my point, because our methodologies, the methodologies we use to build companies are very focused on information technology businesses. So what is the Indian early stage investment ecosystem that I work in?
Right.
This is not a fit for that ecosystem because they are looking for information technology companies. There are other kinds of businesses that other investors fund, but that's not my sweet spot, and that's not the network that I work in. So I think the issue that I will give you some general feedback that may be or may not be helpful to you.
Sure.
Anytime you go into business with the assumption that you're going to have to raise a lot of capital to start the business, your chances of success goes down because off the bat, you're introducing capitalization risk. So if you cannot raise the money, you cannot even get the business going. So that's the first question that you're going to need to solve is like, how do you get out there and start doing business and building a business without having to raise capital? Because whichever industry you're looking at, by and large, the investor psychology is we want to fund a business, not a slide deck or a concept.
All right.
So if you take that investor psychology into account, and this investor psychology by and large applies to most investment categories. So, so that would be my, there we go. Nobody will be interested.
Fair enough.
Capital intensive business is the problem here. So you please try to think about what is it that you want to do and try to make it capital efficient, or come up with a different version of the business, maybe doing something similar but with a different business model, different kind of, that you're not doing manufacturing and so on and so forth. If somebody else is doing the manufacturing, maybe you're doing something else. I don't know, but the point is, I don't think you're going to be able to raise money for this business, as I see it.
Okay, so
and the Indian investment ecosystem is very focused on information technology companies and information technology-enabled services companies. This kind of stuff gets very little investment.
Small question, can I just plug in one? So, yes, so in India, we have seen a lot of last mile connectivity solutions, whether it's Yulu, whether it's Bounce, whether it's Vogo and similar. I can name a lot of them who have been successfully able to raise funds. So, and they are providing last mile connectivity as a service.
But they're not manufacturing anything.
Agreed.
You're not. It's an IT-based service. Swiggy is not possible to do without information technology. It's at the end of the day, the core differentiator is that it's an information technology company, and it's basically organizing a kind of delivery system that already exists in India. The Dabbawala have existed for a long time. So this is basically a next generation Dabbawala kind of concept, and that's not a capital intensive business. They're doing it in a capital intensive way because they're scaling very, very fast, but to prove that this thing works was not a capital intensive thing. All right.
Point noted.
Okay.
Thank you. Thanks so much. Thank you.
You're welcome. Okay. Maureen, are you putting in another presentation? Somebody from the audience wants to pitch? And Rajesh, you have your hand up. If you have a question, you can ask your question in public chat, and I will pick it up and answer it. I'm not sure what your name is. The handle that is showing up is Project Dream Life. You're saying, Shravan, it's an honor to join the discussion today. You're an ongoing inspiration to me and so many women entrepreneurs. The question is this platform open to hear from a company still in the R&D stage, for instance, to receive market viability advice? I'm happy to hear from you, and I will give you pointers on how to validate your business. because generally, if you have been reading my writings and what I say in terms of methodology, I don't want you to do any R&D without customers in the loop. So that is probably the market viability, market validation advice that you're going to get. But sure, I'm happy to look at what you're doing and give you more concrete feedback on your specific business. Satya, if you send me the presentation in PDF format, that doesn't do anything. You have to work with Maureen. There you go. Maureen has given you instructions on what to do. So we will, while Satya and Maureen are working things out, let me explain to you how to use 1 million by 1 million should you want to use that as your acceleration platform. And before I do that, I want to ask you for a favor. If you have serious entrepreneurs in your friends and family and colleagues network and they're looking for help, please refer them to 1 million by 1 million if you like what we're doing here. All our resources are at 1Mby1M.com. There's a blog series that is available for free. You can definitely learn a lot through that. The Entrepreneur Journeys book series is 12 books, and they're all case study-based books. You will learn a lot from them, 12 to 16 case studies per book. These roundtables happen every week almost, unless I'm traveling. And you're welcome to keep attending the roundtables. You'll learn a lot through them. The premium program is our full acceleration program. We offer you extensive methodology guidance, a full curriculum that you can learn a lot from. We help you with business development. Where we have contacts, we'll introduce you to potential customers, channel partners. We'll introduce you to investors, but you have to be ready for that. So we also help you get ready for investors if your business has the characteristics of fundability. We have private roundtables like this where we do the project-based coaching. And we also have a lot of clout in the media, so you can get your word out there through our media channels. The self-assessment on the website is a set of questions that we would like you to ask about your business. These are questions that investors would inevitably ask you, and we want you to be on top of these questions. If you get stuck on methodology points, you can do 1M by 1M Basic, which is our curriculum-only option, and you can learn what you need to learn. Like Sayander, we were asking about sales strategy and validation strategy. All that is covered in the curriculum. So to begin with, if you just sign up for 1M by 1M Basic and start doing some learning using the curriculum, that will also help you. So go to the website, look up what to expect from the premium program, what to expect from Basic, look up the FAQs, video FAQs, and see if this is a good fit for you. There's a full curriculum description as well. We teach on a case study-based learning model. We have case studies over 1,000 successful entrepreneurs, including 100+ unicorns, 400+ bootstrapped entrepreneurs, 400+ VC-funded companies. And we also have video lectures explaining and synthesizing the lessons from the trenches. Our philosophy is bootstrap first, raise money later. Our methodology is lean, capital-efficient bootstrap startups. Once you get to validation, it's a lot easier to raise money. So it's important that you psychologically prepare yourself to do a certain amount of bootstrapping. It is a requirement. That's it. The next few free roundtables are November 14th, 21st, 27th, and 19th of December. We have online rendezvous pretty much every Tuesday morning, 5th, 12th, 19th, and 26th are the next 4 this month. So by the way, for that, you have to dial into LinkedIn, Facebook, or Twitter. Just log into LinkedIn, Facebook, and Twitter, and you will be able to access my live broadcast there, and you can ask questions and so forth. So that's one touch point. On Wednesday, November 13th, we have an in-person rendezvous. You're welcome to come to that if you're in Silicon Valley or if you are visiting Silicon Valley. And we're going to do one more. You're welcome to dial in and ask questions at this point. I'm going to do one more presentation Satya, is that Satya's presentation? Satya, are you on the call? Okay, I can't do your pitch if you're not connected to the phone line. You're going to need to connect to the phone line. Okay, while Satya is connecting in, why don't you guys, if anybody else has questions or comments, please go ahead. These are the call-in numbers. Let me also introduce you to Irina Patterson. If you have any questions about the program, you can ask Irina at 1Mby1M.com. And that's it. If Satya is able to dial in, I will do your pitch. Otherwise, you can join the next session. Here we go. You want the number? The number is right here. The number is on your screen. If anybody wants to call in, you can do that using these numbers. Rick Hernandez is asking, on average, how long does it take to complete the program? Rick, we don't really have the concept of completing the program. We have a core curriculum, which you're going to need to learn, and that takes 50 to 100 hours to complete, a full pass through the curriculum. And what we observe is that people go through the curriculum and then work with me in the roundtables, but also, as you are going and doing something, whether it's customer validation or you're trying to do a repeatable sales process, you're trying to position your company, as you're doing that and as you're working with me. Can you cut the echo, please? Hang on. So as you are going through the process of doing a particular part of what you need to do, part of the strategy, whether you're trying to position the company or you're trying to validate the business, you go back and refer back to that particular module, and as you're implementing that particular function, you're constantly referring back to the curriculum. So, and it takes many years to build a company. So we have seen people stay in the program for multiple years as they're going through that cycle of developing their businesses. Does that answer your question, Rick? Satya, are you on the call?
Yes, I'm there.
Go ahead. Let's listen to your business.
Good morning, Sam. Hey, how are you doing?
Good morning.
Hi.
Go ahead.
So, should I start my pitch?
Yes, please do.
Yeah. Since 1942, there are CCTV cameras, but they've been only a dumb recording systems. So they're not able to prevent any kind of incidents. We see banks get robbed and people get killed in front of the cameras. So you see them in a lot of mass shootings and crime. Crime is on the rise. So there is actually millions of lives can be saved, and valuable properties can be protected actually. So that's our solution. Can we go to the next slide, please? So in the last 4 years itself, there could be 500 million cameras are sold, because on an average of 140 million cameras are sold since last 4 years. So, but there's no smart detection is going on. So these are some of the examples of fire accidents and mass shootings and robberies all over the world. Can we go to the next slide, please? So here is our solution. We are a computer vision tech startup, AI-based computer vision. We are a universally compatible retrofit solution, and it works with any CCTV camera, any resolution or any Mac, and then we add intelligence to the real time and to detect threats in real time. So basically we call it as SuperSecure. Can we go to our next slide, please? So in a typical scenario, there could be, say, 10 cameras, and each of the cameras producing 30 frames per second. And some cameras could be in outdoor, in a parking lot, where there is a bright sunlight. And some cameras could be on a staircase, where there is not enough sunlight or light at all. So what we do is we analyze all the video streams in real time. And using our proprietary algorithms, we enhance the video quality. And we detect in real time all the threats, and also we alert. Everything happens in milliseconds, and we send alerts. Can we go to the next slide, please? So these are some of the examples what we do. I mean, all the cameras, we make it a tamper detection proof. That means any kind of tampering we can detect in real time, be it disconnecting the camera, damaging the camera, or somebody covering it, basically blocking the view or changing the direction. And also any kind of threat, that is people wearing masks, helmets, balaclavas, or holding weapons, and also fire and any kind of weapons we can detect in real time. This is typically for security application. And we are using this computer vision not only for security and surveillance, we are also using for safety, compliance, and crowd analytics, and process automation, and various things. Can you go to the next slide, please? So these are some of the examples. What we do is, we do crowd counting, and for schools, where people get into brawl, or for public places, and we can identify people falling on the ground, and also footfall analytics for any retail environments, and zone intrusion for any kind of retail environment again. And also we do look at them in loitering, and for public transport and airports and places like unattended baggage, such kind of things what we do, like missing children and so on. So it's a retrofit solution. If you see the extreme left, there's a camera setup, typical, where there is an analog camera or IP camera. They're connected to DVR or NVR or VMS. And then we add a SuperSecure layer there. And then this is the typical ATM and bank security. There multiple people are not allowed in bank. That could be posing a threat. So we can detect this, and we instantly generate the IVR call to the registered users. Example, camera in the parking lot can actually detect weapons. And example, send an alert IVR call to me. And in the warehouse there could be a fire. The other camera is only detecting fire and maybe reporting to Maureen. So like that, each camera can be assigned with a job, and basically assigned with a reporting authority or multiple people. And it can generate immediate SMS and also email with an attached image and audio visual alerts. And also we can trigger IoT systems to close the gates or raise an alarm or sirens or call police or do something like that. And also we can create dashboards. Can we go to the next slide, please? So we won a lot of awards for this, and we won Alibaba contest in India. Out of 460 startups, we stood #1 computer vision company from India. And then we were invited to present in global semifinals held in China, so where we stood #1 again. And we were considered as top 5 computer vision companies by Alibaba, and that's where it is. And then we recently won a oil and gas POC. We worked for a company, and then we won World LPG Forum as given a runner-up in Amsterdam. And AgTech
You're
in
based
India,
in India normally, in Bangalore?
No, I'm based of Orange County in California, in Southern California. And the company is the Delaware C Corporation, and we have 2 development centers in Gurgaon and Bangalore. So we have a team in India, but I live in US.
And what is the current situation? You have customers already?
Yes, we have paid customers, and we have paid pilots, and also we have paid POCs and unpaid POCs. And we developed actually while the product is getting developed, and we won some awards, and we got into 2 accelerators, and through them we got some seed fund, and also we got 2 more VC have actually invested seed capital into us. Basically, we have a Bangalore-based investor, Infosys founders, Chris Gopalakrishnan and Shibulal. They have a venture capital firm and a accelerator program called Accelerator. And we we also graduated from a Japanese accelerator, and we are funded by a Chinese VC and a Australian VC so far. So, and we've got, we just started revenues, and now we are doing a lot of pilots and paid pilots in enterprise customers in public transport, oil and gas, banks, and universities, and large retail chains.
Okay.
And we have established presence basically in South Africa, Hong Kong, Thailand, Japan, China, and Netherlands and Germany. And we are yet to launch in the US. So that's where we are currently.
So what brings you here? What would you like from us?
Basically mentorship, and basically this is a kind of thing because in Latin America and Northern America region, because I'm new to US, and though I live there, we just recently moved there. So we want to actually break the ground where we have strength in Asia and India, and so it just happened. But I'd like to know, what is that you can actually bring it? We are looking at VC raise now, Series A, and also we're looking at some mentorship to launch in the US.
Okay. So for that, as I imagine you were listening to me when I was explaining to you how to use 1 million by 1 million. So you need to be a part of the 1 million by 1 million premium program. So if you join the program and just follow the instructions of how to use the program, all that is covered. And if you have any questions, I recommend you call Irina and ask her your questions, and she will be happy to take you through how to use the program and answer any of your questions. It seems like it's a pretty straightforward thing for you to do is right now to just join the premium program.
Sure. Generally, what is your feedback? What do you think about, what's
very interesting. Very, very interesting. I would need to understand a bit more. I think your go-to-market strategy is a bit haphazard. You're trying to go too many places too quickly. So I would there are very systematic ways of going to market that are well understood and well known, and I can coach you on some of that. I would try to figure out where you can find the fastest sales cycles and where you can really monetize quickly and start creating the proof points and, adoption, high velocity adoption, because, the minute you want to raise financing, VCs are trying to go from 0 to 100 million in 5 to 7 years. So you have to show them a pitch, a presentation that gives them a clear strategy of how you're going to go that. Your pitch currently doesn't do that, but I can get you there. I know how to get you there.
Yeah, sure. And the reason why we were doing is none of our, basically we are 3 co-founders, none of us are from any specific domain, example like oil and gas or a public transport where we are doing, or fintech. So what we're doing is we are on an exploratory mode. Our focus is banking and public sector, public transport. But where we are actually getting this, we are leveraging our sales partners' presence and their domain expertise, and then actually wherever we are actually getting, so we are looking for enabling sectors. So if it is oil and gas is enabling, and if it is a low-hanging fruit, then we'd like to stick to that. Until then, we'd like to just go and then explore and do paid pilots and do this on an exploration mode.
Where are you getting traction right now? What sectors are you getting actually paid traction at the moment?
See, as a standalone solution, we are getting actually from public transport and oil and gas. In the banking sector, we are part of a large solution with large companies, in fact, because this is a very volume game, and people are actually very well established. PE-funded backed companies are there, and they win large contracts like $30 million, $40 million in India, I'm talking about. And then we are only the AI piece in the whole solution. We are only like a 3% of the solution, maybe 2.5% of the solution, where we are not able to actually pitch any deal on our own when it comes to banking in India, especially.
Mm-hmm. Yeah. So I would need to understand some of the dynamics of what you've learned from the market so far to be able to advise you more fully. But I think you have something interesting. I need to understand the competitive landscape a lot more deeply, and also these details that you're talking about, like how do contracts get sold? Like if you want to walk into a bank and say, we want to retrofit your entire camera system, what does that mean? What does that mean for the bank? Do you need other people in the picture? Who makes the decision? All of that stuff I need to understand to be able to advise you on where to go and how to frame this and what kind of a strategy to pitch to investors. Because investors want you to come back to them with a strategy of how you're going to make this work. If you tell investors that we have something, but I'm going to take your money and then go experiment, that's not a convincing pitch. So that's where I would like to work with you to figure out what is the strategy that we can take to investors that they would sign up to follow. Okay?
Yeah, I understand that. Yeah, definitely. Yeah, that's great.
All right. Okay. Well, I look forward to working with you. You have something very interesting.
Thank you. Thank you,
Awesome.
Mr. Ramana. Thank you.
Okay, folks. Does anybody else have questions, either by dialing in or in the public chat? You're welcome to write out your questions in public chat, and I'll be happy to pick them up and answer. Here we go. Questions? It was a very interesting presentation, Satya.
Thank you.
Okay,
Thank
folks.
you, Ramana. Yeah.
Yeah. Okay, folks, I don't see any more questions. We're going to wrap up for today. We'll see you next week. Meanwhile, have a productive week. Bye-bye.
Thank you.